Welcome to the commodity section for the Trading Lounge, and here we're looking at gold, and we're looking at these particular 5-wave structure up here for wave A, and it's quite normal to have wave 1 here equal to wave A here if the extension's in wave 3 here, and it appears to be that. But we also need to be mindful too that wave 5 can struggle sometimes a little bit. And also I wanted to point out the precious metals are in the same particular pattern as this as well. So let's, as we can see here, we're basically in the 5th wave here, and there'll be 5 waves in this structure here. And as you know, I've had 2 counts for this particular market, and one of them is that we're heading up for wave 5 now, and the other one is that wave 3 is still in play here, so wave 3 over here. But what we'll do is our target up here, well, our target, the 61.8 retracement level, comes in at 1334, 1334. So we're just 1 point off that here, but still expecting at minimum another little move up through here based on wave 1, wave 2, wave 3, wave 4, and wave 5 up through to here. So that's what we'll be playing with, and then we just need to observe it at that point there and see if we've got a top in for wave 5 here, and if that's the case, then we'll be looking at an A and a B and a C wave here. If it's not the case, then we'll have another little wave up, and we'll be able to work that out once we get a little bit closer to that. So just drilling in here, looking at this particular count here as completing from wave 4 here, wave 1, 2, 3, wave 4 in here. That may get a bit complicated. Mind you, wave 2 wasn't complicated. It was an A, B, and C here, very nicely done as well. But it was quite large in relation or proportion to this particular wave 1 here, so I'll bear that in mind. So wave 4 could be simple, but at the same time we need to expect it to be a bit more complicated, and can pull back 38.2% of the 3rd wave here. That comes in around the 1325, well, 1323 sort of area through here, so we could still get another little move down through here before we see another move to the upside here. So that's that particular count. So wave 5 of A wave here, completing in around the 1335 area, I guess, you know, maybe give or take. As I mentioned, the 61.8 comes in at 1334. So the other little count for this is a little bit different, but just as valid, I guess, you know, and we'll work it as we go. But this is having wave 3 up here as a top, and same count as well, the 1, the 2, the 3, the 4, and the 5 here. So that's the main thing. So if you've got any long positions, then this is the time to, well, our targets, as you know, were 1320 and 1330, and for the longer term trade up from 1274. The trade, it was a short term trade yesterday, you know, looking for support above the 1320 and trading to the 1330 and exiting. You may have exited, you may not, but prepare for a small move back and then another move up here. So you want to be, you know, if you're looking for that extra bit there, then you know, it is there, but it could get a bit time consuming in this wave 4 here as such. But it's all just on the 15-minute chart here, so you can see a nice 3rd wave up through to here. It appears to be an A and a B and a C wave here. But yeah, and wave 4 can move back down here a little bit before we're seeing one more move up. But you know, I'd be very careful about holding long positions from here on in, because it's going to get quite toppy and overlapping wave structures and so forth. The silver market, same pattern here, basically looking for 5 waves up, and in this particular case here, there's possibly further upside here, but I'm just a bit wary because, you know, it's obviously going to follow gold, and things can terminate quite quickly if things are being led by a stronger market and so forth. So We've got so far here, just on the 4-hour chart, we're looking at all of this being wave 1 here, back for wave 2, then all of this in here for wave 3, and this is a possible A, B, and C here for the 4th here, so we'll be looking for the 5th up here. But, you know, the 5th wave should have more legs in it than just here. It should be sort of up here somewhere. Yeah, I'm not kind of sure what to sort of say about here, but we do need to line this market up with gold and also base metals as well, the copper market as well. So it has the potential to move. Let me just have a look at this here. I mean, if it was going to move 61.8% of the 3rd wave here, which is likely, then we'd be looking still up at, you know, 2160 sort of area here. So anyway, we'll just sort of see how that goes a little bit. Yeah, if you are long in this market, then suggest keeping the stops. You know, this is like a little 5-wave structure up here, so this can pull back here as an A and a B and a C wave coming back into this area here. So you need to keep the stops around the 280 area through here, and then a move up here as well. But you can see that, you know, all of these tops, it's struggling up here, isn't it? It's not like it's had a big correction and it's like firmly ready to move up as such. It's a bit of a running correction and can move up, but it's, I don't know, I don't find them the safest type of corrections to run from. But in these cases, buying new highs is the way to trade this particular sort of pattern through here. But look, expect to move back quite possibly to the 61.8% from here to here, back to roughly around the 2090 area. So stops at 2083 should suffice. A breaking of that would see a larger pattern, corrective pattern unfolding there. The copper market is pretty much the same as well. It's just a 2-hour chart, all starting, you know, sort of the beginning of June area through here, and we're looking for 5 waves up. Now, I've got 2 counts here, and one of them is this particular count where we've got wave 3, 4, and 5 to here, then an A and a B and a C for the 4th here, and then the 5th here. So we're looking for a top across the 320 area through here. The other count that I've got is up a little bit further. It's where we had the last count in the last chart here at alternative wave 3 here and 4 here. This one here goes wave 1, wave 2 over here, but an A wave, a B wave, and a C wave here for wave 2. All of this the 3rd wave. So looking for a 4th wave across here and then a 5th wave up through here. But we do need to line these metal markets up together, within reason anyway, gold and copper and so forth, because they're all moving on the same premise. So look, anyway, there's going to be more corrective patterns across the 320 area here. BHP was up last night, so you know we're still sort of climbing to the upside with the metals. The oil market is looking a little bit weak, but let's just drill in here and have a little bit of a look. Yes, look, all of this correction here is a little bit a bit tricky to lay out, but I did have a reasonable A, B, and C wave to this point here. But this low here makes it a bit, well, it opens up a larger corrective pattern from this point here. But I need to be careful because I know that 105 or just below 105 in this case is a good support. This is the retracement area through here. We're seeing the market being over sold at this point as well. But that said, the momentum for this move down through here is still to the downside, so there is still weight pushing it down. We didn't get support on 106. That was the sort of line in the sand that we sort of needed from there. So I suggest just like waiting for this. I mean, this is headline driven, this particular market at the moment, while the Iraq situation sorts itself out. I mean, the other members are supplying crude for to fill that gap, but it is a political driven thing at the moment, and the wave count it's not clear, but we do have a nice correction here. So the other side to this is, even though it's sort of ugly at the moment, it is a corrective pattern, and it will give a nice next trend to it as well. So finding support on 106 would ignite that trend to the upside. But while it's dancing around the 105 and a bit lower, then it's got that bearish bias to it. But we just need to be a bit careful here. So we don't have a long trade set up here just yet. Excuse me. Moving over to the grains. Now, the thing with the grains is that, yes, they've all made another low, and yes, we're still searching for the particular low from these highs. They can be in place once again, but at the same time, we don't have any evidence for that as well, except in the bigger picture where we were looking for, in this case, a pullback to the wave 4 of 1 lesser degree through here. This move down through here, we were counting 5 waves down here. We've got those 5 waves in here, so there can be lows in here, but we don't have any evidence for an impulse wave up or a trade set up to the upside here either. And this is with all the grains, so there's not a lot sort of happening in the grains at the moment. As such, we need to find, the markets need to find their feet, and we need to see a building process in play, and then we need to sort of build into that into that trend if it's going to occur. Now, from this last high up through here, we do have a 5-wave structure through here. So we're looking for, on the positive side, we're looking for a 5-wave structure to the upside. If we can get something like this here building, then we know sort of where we are at such nice clean 5 waves. But if we get something that's just in 3 waves pulling back to the 50-60%, and I'm using the 1350 here as the retest area here, if we see this fail through here as such, then we know that we're going to be coming further down at that point there. So we do need to allow ourselves to work out what's this, and if we get this or this. If we get this, then we can look at shorting. But if we get this, then we need to be looking into the long side from that point there as well, and building in on the 1350 support, and then on the 72 support, and climbing to the upside. But failing to do that, then a short trade will come in at 1320 as a retested resistance, looking to add at 1300, at 1310, and under 1300 as well, and building to the short side on a larger move to the downside. So we just need this to play out until we've got something here, that's all. And this correction here will be something like this here, but a bit sharper, that's all, and a bit smaller. The wheat market, so I don't have a lot to say on the grains at the moment, because this is just the daily chart here, and corn is the same as well. We're looking at lows. The corn market's moved through its old low here. This one's yet to do that. The idea here is to count 5 waves down here if you've got nothing to do, but one way or another we can see that from this point here, the market has been slowing down through here. Okay, so even though it's edging lower, it is slowing down as such. So we need to sort of take that on board, but at the same time, we also need to look for an impulse wave to the upside, just like we've mentioned with soybeans there as such. From the 600 area through here, it's a bit difficult to count this down through this here. This area here makes it a little bit difficult because this retraced so high here compared to this one here. It does leave the space for this being down for 1, back for 2, down for 3 here. This is like 5 waves down through to here, dealing with subgroup 2 area here. Once this becomes the resistance, or if it becomes the resistance, the 572, then we'll see further downside here. We know the old lows at 557, so we can expect support to come in around this area here. So look, I'm just, it's not a place to go short at an old low, and it's not the place to buy a bounce unless we can recognize the wave structure within that bounce, and we don't have that 5-wave structure yet. So, but we're going to keep going at it all the time. So there's nothing really to say. We're just sort of fishing for it, and we just don't have the evidence in there just yet. But it should arrive. It should arrive. In the weeks ahead. That's what I'm sort of thinking. So anyway, let's see how we go. As I mentioned, the corn is the same as well. The sharp move down through here appears to be in 5 waves in terms of 1, 2, 3, 4, 5. So we should see a bounce back to the 420 and then a move down to the 400 area through here as a larger 1, 2, 3, 4 and 5 down through to here. But we can certainly expect support at the 400, and we can expect a bounce as well. In the daily chart or weekly chart, it's a bit easier to see this wave 3, 4 and 5 down here. It's much clearer in this market than the wheat market. So, but I'm figuring they're all going to be moving together. They're all going to be going up together, which is something to consider as well, in terms of which ones are you going to trade or have small positions in each or so forth. The coffee market, not a lot of change here. The London market is still sort of holding firm here, while the market's, well, this market can certainly take this low out through here, and the one being under 172 is meaningful, but the 170 here in this case here would be the short trade setup through here as a retested resistance through here, but expect to bounce off the old lows here as well. So even though it may move lower, it's not like it's not like it's going to race down. Do you know what I mean? So it's not really a good short trade. And once again, we are looking for the 5th wave coming down through here, and it's a little bit tricky to count through all this here. I'm even looking at this as the A, the B, and the C here, and then this one being the last one down through here. So look, I just think we just need to leave this, and if we get support above the 180, then we can look at that, or if we get a move down through here and then support back on the 172, then we can go along from there. But once again, we don't want to short into a possible low, and I know it's not going to race off anyway, so but the pressure is still to the downside. The sellers are controlling the market, and it's still it's oversold. But the pressure is still to the downside, but a low is close. So it's just a rock and a hard place. So once again, we just need to leave that. The sugar market here, I think from the 1870 area through here down to the 1770 area through here, it does appear that we've got a 5-wave structure down through to here, 1, 2, 3, 4, and 5 down through to here, and 1, 2, 3, 4, and 5 down to here. So look, I was just basically at minimum here, just expecting some type of corrective pattern that can move like this here. But unless this 18 becomes the support here, a nice tested support after a sort of a bit of stability here, consolidation, then this market is still weak and can move lower. But on the daily charts, it's approaching its lows down here as well. So we can expect a bounce from here as well. You can just see that on the daily chart. So there's no real trade set up at this point with this market. And it's a bit the same with the orange juice as well, really, because just on the 2-hour chart here, there's a couple of ways to interpret these particular moves down here. They're not very clear at all, but in one way or another, we could have a series of 1s and 2s there. but this is definitely the third wave in through here. So, you know, I was thinking that the short trade, if we get a wave 4 to here and a wave 5 to here, we're still not interested in shorting this particular fifth wave through here. What we are interested in doing is, once we do have this whole 5-wave structure completed, and we'll know that because we'll get a larger correction like this here happening as such, and then we'll be looking further to the downside. And this is the short trade that we'd be looking for here. It may not go back up this far, but what we do need to sort of sign off on a 5-wave structure to the downside. And I just don't think it's finished yet. So I think a small retest into 150, 152 area here, then a move down. But this is the larger correction that we're looking for here to bring in short trades in this larger third wave to the downside. So anyway, we just got to wait a few weeks on this one here as well. Let's just have a quick look at the US dollar. Well, it's still lower, not that it's supporting the commodities that much, but you know, it can do, because we are looking for a low and so forth. So we also know that this is the 79.80 is the 61.8 retracement area, so we can expect support here. That is from this all of this move up through here. So the markets will be starting to look oversold into this area, but the momentum is still to the downside. This wave structures here, even though they're not labeled, you can see that they're stretching out now, aren't they? So this is like the middle. This is like the middle of the trend that we're looking at from at least this point here. So there's still more to come down through into this area here. All right, thanks for listening.